Okay. Some random Simon Says Crypto going live. Um, I just did a show with Alan Staple over at the Staple Crew, and there was a few questions that I noticed on my channel that I wasn't able to get to, and so I'd like to at least address those questions. and let's see. Um, One of them was from Thomas, and I'm just going to read here off to the side. And Thomas Thomas asks, say I make a $833 a month, uh, I assume, payment into a life insurance policy. That's 10K per year. How much of that would be translated into cash value? Well, Thomas, the first part is it's going to be uh, it's going to really depend on how your policy is initially created. And what I mean by that is how much is going to base and how much is going to PUA. Now, this is life insurance. We are putting money into a life insurance policy, but not just any policy and not just with any companies. In the IBC process, we are using mutual, non-direct, participating life insurance companies. What does that mean? It means mutual. It's all beneficially mutual, but it's really more about the participating part. Participating means that every policy holder or owner is an owner of the company. And now, effectively, what does that mean? If there is a surplus of funds, you might call that profit, but it's not called profit here. We get a dividends, a repayment. We use that repayment in a number of different ways, but that's one of the benefits of using these types of companies. Now, let's go on to your policy. And in your research, if you haven't found anything yet, I totally encourage you to do so, because there is talk about the base and the PUA. PUA is us actually having the ability in the form of a rider. So we're paying a small amount of money to have this rider to give us the opportunity to pay more, buy more death benefit. And if you haven't read the book yet, definitely read the book, okay? Because a lot of this isn't going to make sense, and you won't see the process of the infinite banking concept. You won't see it. You won't understand the value of the product, your policy, if you haven't read the book. Well, let's go back to this. So you got your base, you got your PUA side. Now, let's say you have what's called a 50-50 policy. Your reference was $10,000 a year, okay? And so that means you're going to put $5,000 over to the base and $5,000 over to the PUA. Now, you can only contribute to PUA, paid up additions, for only a certain amount of time. It could be 4 years, could be 7 years. There are other ways to get it to run longer, but that's kind of the typical, okay? What that means is after, let's say, just 4 years, you stop your ability to pay PUA falls off. So now you're only left with $5,000 a year, okay? But let's backtrack, because there's another part of your second question. You said I have a preconceived idea that a good amount of money is being invested, goes into me buying insurance, and it does, and doesn't translate into cash value. So when you do just base, over time, it builds cash value, okay? And again, depending on your policy, depending on the company, that cash value can grow faster and guaranteed, or just, it could be slower and guaranteed. We want the guarantee, though. We don't want fluctuation. We want a solid number year over year. That's what it's going to be. PUA is like rocket fuel. Remember, we're doing life insurance. We're saying, hey, I'm insured for this much, say, $25,000 or $25,000, $250,000 to $250,000. Okay, well, your payment for X amount of years at your age, health conditions, is going to be $5,000 a year. But you got a PUA rider on there that allowed you to throw in another $5,000 on top of that right out the gate. And so you did that, and they for 4 years, and you increased the what you essentially done is increase the death benefit, thus increase the available cash value over time. Now let's talk about the cash value in relation to PUA specifically. And I'm only going to speak to my policy. This is how I understand it with my policy. Okay. Because I am not licensed currently. And if I was, I could definitely go down far deeper in it. But with PUA, when you buy extra death benefit, paid up additions, that is directly reflected into your cash value part of the policy, the part that we're trying to collateralize. So if you do $5,000 in PUA in 1 year, well, there's $5,000 available to be collateralized. Now, on my policy, I'm only able to collateralize 90% of my total cash value. So this would be $4,500 on my $5,000 that I just put in. And now I could do a policy loan. I'm not taking that money out. I'm taking a loan from the insurance company against my cash value. My cash value is still compounding. It goes and goes and goes and goes and goes. And now I can go do stuff on Main Street, buy more crypto, pay off the debt, go on vacation. Like literally there is no limit on the things that you could do. And that's what we want. In truth, we don't give a rat's booty about the death benefit. That's not what we're after. We're after the cash value and how we're able to collateralize that. We're also after a guaranteed, non-fluctuating, level, year over year, compounding, cash value building, and unlimited access, except for limited by how much cash value you actually have in there. Thomas, what up, GA? What's good? Hey, brother, I'm just doing a round 2 follow-up. I know Alan had to go, and there were some questions I just wanted to address that I saw in the chat. So I'm trying to answer Thomas's question over here in regards to he just wanted some more clarity on the cash value, also the base, because he's looking at like, well, sounds like I'm throwing a lot of money at insurance, and so what's the cash value going to be like for me in my policy? But that's kind of how that works, Thomas. If you want more, dude, email me. Simon Says _crypto right here. Simon Says _crypto, but it's actually at Proton, not Dio. At Proton Mail. Get at me, and I'll give you the I'll give you my cell, and we can chat it up and just get you schooled in the ways of the IBC. But if you haven't read the book, read the book. Definitely read the book. Now, GA, you got any questions, bro? Let's see here. There was a question, a situation really that was going on with BG. BG, if you're out there and you're listening, great. I appreciate you. But BG had kind of this interesting issue here where it sounded like he was maxed out on his insurability via his work. And so he's still BG still trying to get a policy going and would like to do it to the daughter. So, I mean, just thinking now, if you're, at least you got insurance. That's good. Sorry, I'm just reading the comments over onto to the left of me here and thinking. I'm sure there's a variable with you being maxed out, possibly through your work, but I would definitely you got my email there, and I sorry folks, I can't bring it on the screen because this is a different chat off my YouTube channel, so I can't bring that up off of old video. Yeah, BG, I still think there's a way, brother. Didn't expect a follow up. Cool. Yeah, Becky, doing a follow up. You know, there was just some questions that didn't get answered that I felt needed to be answered and addressed. Thomas was asking some great questions, and I like that. Not really. I missed the live with the stable crew. Was watching the presidential debate. Noticed that you had decided to say hello. Yeah, hey, what's good? So the debates. I know my wife's listening. I'm like, I'm out, bro. I don't need to get triggered tonight for some big hoopla. Not that I'm saying it's not important to listen to how they say and what they say it. That's always good. Yeah, watch that stuff tomorrow, brother. Catch up. We just talked about the PDF. We really talked about the PDF account a little bit. I did a whiteboard, my first whiteboard. Whatever. I did my first whiteboard, so it was okay. It was definitely a good time. But yeah, catch that up, GA, and I know that GA, I know we'll be in touch with you soon. I'm sure JB's been in touch with you, so yeah, man. Becky, explain again what PDU and PD. Okay, so it's actually PUA. Whiteboard was great. Thank you. Actually, here I can do this. Look at Pam. Oh, sweet. All right, so it's actually PUA and then PDF. So PUA stands for paid up additions or paid up additional death benefit. So we're having the opportunity to buy extra death benefit. And when we do that, it directly is reflected into the cash value. The cash value is the item that we're collateralizing and going to the insurance company and saying, hey, I'd like to take a loan for X amount of dollars against my cash value. They're like, all right, cool. Anything for you. And they deposit those funds into your bank account, and then you are on your merry way to do whatever you would like to do. But it is a loan. You do have to pay it back. But the terms, it's like pretty much no terms, pretty much a no term loan. And you are actually on the other side of that. You're also benefiting from that loan, which is through dividends. Now, everybody's benefiting from that. What I mean by everybody, anybody that's a policy owner within that mutual insurance company gets dividends, and that's how dividends are created. Not the only way, but that's a way. Is through all the loans that we have, and we are making our company profitable, our insurance company profitable, and in turn we get dividends. So it's a nice circle of life, if you will. So yes, PUA, paid up additional benefits or death benefits. So every time we do that, it increases our death benefit, and by regulation and by contract, they have to increase the cash value to keep up with the ratio to meet that death benefit obligation. So in turn, because you increase the death benefit amount, they in turn have to increase the cash value, investment strategies, et cetera, that they do, all the awesome bean counters over there at the insurance companies. So that's PUA. PDF stands for, at least in my policy, premium deposit funds account. So basically, it's like it's an account within the insurance company. It is not under your contract, but there is an attachment to your contract / policy. Basically, what this is, it's an account that you're able to obviously deposit funds, but it's premium funds. So premiums equals base and PUA, total yearly premiums. Now that's not forever ever. Okay, but you're able to throw in 2 years of your base and your PUA. That's your max that you can do in the standard PDF account. So in my situation, I have a $15,000 a year policy. Now that's max. Okay. My base is 5,000. That is what I'm obligated by contract to meet every year without fail. Okay. I also have the PUA rider for $10,000 a year that I'm able to contribute to, but I don't have to, but I get to. Okay. And the reason I wanted that is because I want to utilize the cash value as soon as I'm able to start knocking out some debts off of Main Street and get those debts taken care of. And then in return that money to my policy so that I may do bigger and better things in my life. Again, I really recommend anybody out there watching this, all 5 of you, appreciate the love and support. Read that book. Read the Becoming Your Own Banker book by R. Nelson Nash. And if you don't like to read, get the Audible and just listen and listen and listen. I'll tell you what, it's kind of nice, to be quite honest, to think and talk about something else other than crypto. Not that I got anything against crypto. I mean, it's like right in the name right here. But it is very nice to talk about a whole different topic, and it is very much directly related to my financial future and my family's financial future, and so on and so forth. And so I really like this. One of the things that attracted me to IBC was basically the cash value, but it was the death benefit too. I've had me. I know I kind of roll my eyes, honey. I love you. Me and my wife have we've gone back and forth, not in a negative way, but we've had multiple conversations on I should get some death benefit, right? Because my day job is in the construction industry, commercial construction industry. So that has its dangers, right? And if something happens at work, I mean, it ain't gonna be a big payout. It's more just gonna be a sorry for your loss, good luck, kind of a payout to the wife. And my problem is, like most people's problems, it's like all I saw that was another obligation, another bill. It's like more money going out to not me, and that might, hey, look, that might be selfish. I get that, but all I saw was opportunity leaving my hands, and if I die, maybe early on in my life, my wife will get a check, which is good. I like that part. Okay. But I would rather take that money that I'm throwing here and go invest in something else. That was my train of thought. And that's most people's train of thought. Like, I get it. But after, actually it was page 3 that really got me to continue on reading the Becoming Your Own Banker by R. Nelson Nash. And man, it was good. I listen to it all the time. And because every time I've listened to it or I've read the book, there's just something that hits me just a little different than the last time. Oh, thanks, Mark. I appreciate you, brother. Appreciate the props and the love, man. I really do. Like you guys coming on and just saying hi and asking questions. Really, it's worth every minute of every day that I do this stuff. I love this stuff. This can, in my view, this can definitely has the means to help out a lot of people generationally, if done properly and right. And I feel like anybody can really participate with this at some level. Some might have it easier than others, and I'm not talking financially. I'm just talking about the dynamics of your policy situation, all these other variables that an authorized IBC practitioner like Jarrett Vick, Scott Chapman, another nice lady is Becca. Dang it, Miss Becca. I don't want to screw up your last name, but I'm actually going to try to get Becca on our show because she actually wrote a kid's book called Beaver Bankers. Oh, man. I can't even do that. But there you go. You can kind of see it right there. Oh, all right. There it is. Beaver Bankers. She wrote this book. It's a kid's book about the infinite banking concept and how you can try to instill upon them at a very early age the infinite banking concept. Really cool. Actually, the kids' book actually hit a few more spots for me that just got me to change my thinking just a little bit more, because everything I learned was on the streets. Anyways, great book, short one, love it. I know it's out there on Amazon, but we're gonna definitely have Miss Becca on and to talk about her book, because I really think that that's a home run. She's actually tomorrow going to be doing a reading of the book at a library near her, which I think it's great. Published author, and I got myself a signed copy. Yeah. Anyways, so yeah, thank you, Mark. I appreciate the love and the prompts. I really, really do. Trying to think what else I was going to go into on the book, really. I am full transparency, of course. I know I mentioned about doing a study group. I still have every intention on doing that. I'm just navigating my time right now to ensure that I can 100% commit to it. I totally want to do it. I have every intention of doing it, but I really want to ensure that I can cough up about another hour and a half and do a reading of the book, a chapter or section or whatever, and then we talk about it, and just share our thoughts or whatever we got. Even if you've read the book, come on over. But that's going to be that's up in the near future. I'm just navigating my schedule and my obligations that I already have in play, like getting my whole life insurance license. So, it's kind of a priority for me because I definitely want to be an authorized IBC practitioner, as I love this topic. I literally could talk about it all day. In fact, I talk about it all day. Let's not lie. I totally do. Let's see. What else was I going to talk about? With the book, there was a few things in there that I noticed that I was already doing, but I didn't know I was doing them. Of course, there's the pay yourself first. I'm a big fan of that. Richest man in Babylon. I talk about it all the time. Pay yourself first. I've done the pay yourself back with interest. That came to me when I was having discussions about IBC and financial, velocity of money, and things like that. I was having a discussion with a few close friends, and I was just looking at my monthly budget, and I knew how much money I had in my my little cash bank, if you will, underneath the mattress, and I needed some cash, and I was fighting like heck not to have to dip into it. Like, I didn't want to do it, because I was like, that's for investment. That's going to go to investments. And then, I thought, I was like, you know what? I need the money though. I got to use this. Dang it. And it was hard. I didn't want to. I took care of business, but then it was actually like a week later when I was like, oh my gosh, I can totally create a loan for myself. This is great. This is a great way to pay it back, and still contribute to my cash pile. I was all excited. I wrote up one contract for myself. I, Simon Polson, owe me, Simon Polson. Owe me. I think it was like $400 plus simple interest. And anyways, I remember writing that down. It was I felt so excited. Never felt that much excitement to create a debt for myself. But I had a plan, and I saw it, and I was like, great, this is how my money's going to get back to that pile. My pile is going to continue to grow, and I'm still contributing to my pile by the pay yourself first protocol. So then after I made some payments to it, I decided to go back to every time that I could remember. And every time that I borrowed money I had to do a random purchase that was not a part of my budget, I treated that as a loan. So I added it all up, and I had about $6,500 in loans plus interest. So I never had smiled so big in my life going, yeah, I owe me $6,500. You know, I was so excited because I had found a way to pay myself back and have my money grow again because I knew what would happen. So that was really cool for me. I love sharing that because it was a personal life hack. And then, you know, when I really was grasping everything about IBC and reading the book and listening to it, I was like, oh, I know that. I know how to do this. I'm doing that. That's great. How can I do it better? How can I do it more efficient? And, you know, what can I put it in? You know, all these great questions. But I took off like I took to it like a moth to a flame. Only I lived. So, but yeah, read the book. You know, pay yourself back, pay yourself first, and pay yourself back with interest. Do it. You'll feel great. Because I mean, we're always going to need to borrow money somewhere, some way. You know, we always rob from ourselves, but we never pay ourselves back. You know, it's just something we do. Like tonight's show, I talked about instead of saying oh, I saved $10 on a purchase today. It's like, no, you got a discount of $10. In order for you to actually save that $10, you got to take that $10 and put it somewhere in savings, some type of future investment pile, whatever, but do the action and it's going to be awesome. You guys got any quickie questions? Because 4 a.m. comes early. I'll see if you guys got anything. Becky, did that explain? Actually, Becky, did that explain the PUA and PDF? Did that work? Watching comments. Man, the debate must be good. I'm probably missing some. Maybe is it a cage match? Yes, it did. Thank you. All right, thanks, Becky. Appreciate it. All right, well, cool, everybody. Hey, that was just a real quick follow up. You know, I might try this on some random nights. So be on the lookout. Yeah, thanks, Mark. Appreciate the love and sleep well. Yeah, it's over. Yeah, I'm sorry, Becky. Like I said, 4 a.m. comes early. I got to get up, get cracking, studying, emails, phone calls. You know the drill. You know the deal. Anyways, thank you, everybody, for stopping by, making me feel good, and hanging out with me for another 30 minutes on your Tuesday night. You guys can check me out tomorrow. Of course, I'll be on the Dip Toe Let's Talk Crypto show. Me and Melissa got Versange from Black Swan Capital. He's going to swing through. We're going to ask him some tough questions. So anyways, check that out. 5 p.m. Oh, it's over. The debate's over. Oh, thank you, Becky. Oh, well, the debate's over. I'm over. Now it sounds like we can all go back to bed and sleep real good. All right. Peace and love to you guys. These are the Deuces, and I'm Cabooses. Y'all be good. Take care, and we'll see you tomorrow or next Tuesday. Take care.